After leading the pack earlier this year, technology ETFs are lagging in the second half, as are almost all thematic tech ETFs, which slice and dice tech in a lot of different ways. Let's talk to Dave Mazza, CEO of Roundhill ETFs. They have three of the hottest thematic ETFs of the year. Dave, you launched the actively managed Mag7 ETF a little over a year ago. Big hit, thanks to NVIDIA. It's still outperforming. It's up 33% this year, but it was up 50% in July. Inflows have kind of stalled out here. Is the public losing interest in putting more money into big cap tech?
Well, I'd actually say the opposite. There's certainly been more of a two-way market. We've seen days of large inflows and days of large outflows, because I think the Magnificent Seven are an interesting junction here across the market, where they were the leaders for a lot of reasons. The focus on AI, the disruption that they were doing, and the long-term benefits. And the stock, has moved down from a close to 50 to down to 44, and a bit of a drawdown. But actually, in the last few days, we've seen money come into Mag. So I don't think that story is over by any way, shape, or form.
Okay, the other big story, your AI ETF, the chat is the symbol here. You launched it a little over a year ago. This has got all the right names in it. It's got NVIDIA, it's got Microsoft, it's got Alphabet. But it's really just performing in line with tech in general this year. This is a problem for thematic tech. How do you find companies, besides the obvious ones, besides the NVIDIA and Microsofts, that are going to truly benefit from AI? How do you broaden this thing out a little bit?
Yeah, it's interesting. Really, the only clear winners in 2024, in contrast to 2023, are the Magnificent Seven names and the leaders. When it comes to chat and its AI exposure, that fund is focused on identifying companies at the forefront of generative AI. So we use really two mechanisms to identify that. Looking out for companies' transcripts and earnings reports to identify their number of times they're using keywords associated with AI. And then we use fundamental research to score them and rank them and really judge, is a company just using a lot of AI to be known as an AI company and not doing it? Look at Intel. If you look just at their earnings reports, ton of focus on AI. That hasn't been the case. They've been an underperformer, which is why in the chat portfolio, you see a large overweight to NVIDIA and AMD and a lot less so to a company like Intel. And that's why active management can be helpful in thematics.
Okay, another thematic ETF you had a big hit with earlier this year, your GLP-1 weight loss ETF. There's 20 companies here, but 40% Novo Nordisk and Lilly, 20% each. I had you on when it debuted in May. It's up 10% since then. But how much upside is still left in the weight loss business? I mean, Novo Nordisk is up 300% in the last 3 years. Lilly's up, 500%? How much is left here in this game?
Yeah, and it's fascinating to think these are healthcare companies, right? And they're behaving like tech stocks. But really, when we think about Lilly, when we think about Novo, they're in the NVIDIAs of weight loss and GLP-1. It's projected to be a $130 billion market from a total addressable market standpoint. We know the issues with obesity and diabetes. And I actually think there's more opportunities here. Right now, we're only talking about injectables. That's why there's such a large overweight in our portfolio to Novo and Lilly, and that's paid off. But you also have exposure to a lot of smaller names, Viking, Zealand, Terns Pharmaceuticals, who are doing really interesting things in the GLP-1 space, whether those are non-injectables like oral therapeutics and the like, that investors can get access to with the OZEM ETF.
All right. Thank you, Dave. Much more coming up on thematic ETFs on ETF Edge. That's 1:10 p.m. Eastern Time. Dave's going to be joined by ETF expert Dave Naudig. Is thematic investing really a smart way to go? We'll talk about that, and we'll explore that. ETFedge.cnbc.com.